Oh my God. What's up, everybody? Holy crap. This was like so difficult to get this crap to turn on. Like, bro, I still haven't figured out why the hell it didn't turn on. What a mess. So yeah, we're here. Okay. Hopefully you guys had a a pretty good week last week. So hopefully I didn't blow your ears out. But we have a lot to talk about. But I have gotten a bit scrambled because of all these tech issues that just popped up, which I still have no idea what the hell just happened. Like, bro, why? So we do have federal fund rates next week. That's going to be interesting. They're either going to cut rates or keep it the same. Looks like they're going to keep it the same. But we have no news on Monday, no news on Tuesday. So, we're going to have to think low probability. We're going to have to be cautious. People are expecting gold. I don't know if I talked about this the other day, but wait, what did I talk about? I think I talked about it on one of the live calls last week. But gold has now eclipsed the dollar in terms of store of value. Most of the time over the last 70 years, since has it been like 100? I think it might have already been 100, close to 100. Maybe a little bit over for the fiat currency, the dollar being the reserve currency. But for the first time in history, gold has now eclipsed the amount of people holding it versus the dollar for store of value. That's not necessarily the best thing for the dollar, because the belief in the dollar and the petro element of the dollar is what keeps it strong. The belief in the dollar and the petro portion. So seems like, things are still not going too well for the US dollar being the reserve currency, but hopefully XRP can help change that or help solidify what's going on with the dollar. We could talk about XRP a little bit later. We could have a pretty long call today. I do want to get into some crypto stuff later because very big things are taking place. I invest long-term in crypto. I don't talk about crypto a lot here on this channel, but I am invested in it. And those of you that are, stay tuned for that later on. But yeah, so good morning, everybody. If I didn't say good morning to you, it's kind of a bit scrambled. I'm sorry. So yeah, let me actually pull this up though for those of you that may be new. This is what we go over here on this call on Sundays. So before we get started, right, take a screenshot of this. We will go through every element, and then along the way we will answer questions, which is, again, the main focus of this call is to get you familiar with how to analyze what we're going to see in the coming days, right, in the coming week. It's in particular. Okay. Let me get some water. Okay. So yeah. So yeah, take a glance at this. If you guys haven't been here before, welcome. If you have been here before, you know the vibes. You know what we're going to end up doing. There's a lot of stuff. And again, along the way, if you have questions, just let me know. Okay. Be patient with the call. If you're a 5-minute trainer, just tell me when to buy and sell. You might as well just leave now because this ain't a place for you. I give signals. People say that I don't. I give signals at times, but I make you work to figure it out, right? I point to where price is going to go, and you pick the model you're going to use. In my private group, it's a little bit more hands-on, but, here I'm also putting you in great position to understand what's happening in the market so you can make your own decision. So I am not the oracle of the reason why you take trades, okay? Because I'm not a financial advisor. This ain't financial advice. I'm just here to help you learn how to do it on your own. And if that's not what you want and you want someone to do it for you, then, you're going to have a hard time here. You're not going to like my content, and that's fine. Okay. So with that being said, we will get to the indices a little bit later, right? But we're going to do a full-on risk-on, risk-off analysis. So again, that starts here with the current news events. So Sunday, Monday, consolidation, manipulation. Tuesday, Wednesday generally could be expansion. Thursday, Friday can then, if we hit a PD array after prices ran aggressively, we may then be able to set up something going opposed to what that overall direction is. Basically, power 3 for the week, right? The early start of the week creates the wick of whatever candle's being created. Then the body's lion's portion, the biggest portion of the move, most of the time happens on Tuesday and Wednesday. That also has a chance to set the high or the low of the week. And then wherever that candle ends up, if it hits a PD array or some significant liquidity pool on Thursday or Friday, that is when you can potentially anticipate a potential reversal. Okay. We do have a holiday. I'm not sure what that. Oh, wow. I didn't even know that was a national holiday, I guess. So yeah, we got a holiday on Friday as well. So one thing I do want to point out as well before we dive head first, has to do with liquidity mapping. I've been getting this question a lot. I mean, I post it constantly. I talk about it constantly, but for whatever reason, it's been getting overlooked. So let me make this super, super clear so there's no more confusion. I showed it the other week too, but I've shown it all the time. I talk about it all the time. So if you haven't taken notes or screenshotted this or put this in your mind, you should. This is how we pick or determine liquidity, right? Like this is the targets we use for counterparty liquidity, like the stop run. That's what a stop run is, right? It pulls people in the opposite side before it turns. And then it's also used as targeting, right? So counterparty and targeting. It's coming from one of these or a couple of these different liquidity pools. Okay. So again, take a screenshot of this, everybody. Again, I got lots of questions this week about liquidity. And I'm like, have you focused on this? Have you tried to look at it and show it in your chart, right? Just individually, going on, thinking about nothing else, labeling previous day's high and low, week high and lows, month highs and lows, and then just observing what's happening around those highs and lows. What level was taken before it got to that level, right? I mentioned this process as a drill in January and multiple times last year as well. So wait, let me see. Oh, Maddie, it's your birthday? To the day of the event. Wow, that's interesting. Juneteenth. That's interesting. June 19th, huh? I didn't know that. Well, happy almost birthday. Hopefully you have a good time, bro. Hopefully you have a good time. But yeah, so again, this is very, very significant, you guys. I got higher time frame reference, lower time frame reference. If you haven't spent time looking at this, again, when I'm looking at liquidity and pointing out a target or a particular level to be swept, keep this in your mind because you'll see pretty much every single time, I'd say 95% of the time, unless I'm using like a 1 hour or 4 hour high or low, which is many times part of one of these, you'll see that the levels I point out literally are tied to these levels, right? It's the most simplistic way to think about what liquidity pools are significant and which ones should be tagged or utilized. Okay, so there's a couple other little things in here too. First presented for value gap, new week, new day, regular trading hours gap. And then every hour having a first presented for value gap. You can add, like I said a second ago, hourly highs and lows, 4 hour highs and lows. But this right here is a simplistic, kind of narrowed idea of liquidity mapping. Okay, that's what I call this because again, you're mapping the terrain, right? What liquidity pools can be utilized or should be utilized, and pretty much every single day, one or more of these levels are being targeted. I also have higher time frame PD arrays, not just any random ones that are on the chart, right? Like if you're looking at something right now, something 3 months away is not going to be very interesting. Higher time frame PD arrays, what I mean by that is things that are in close proximity. Okay, so I'll kind of define that as well. We do it every week, right? It's very structured how I do this call, And it's just based on that rubric I gave you guys, that study guide. And we just go one after another until we get to the indices. Okay. So again, take a screenshot of this. Hopefully you got a screenshot of the other thing I showed earlier as well. But yeah, so let's get into it, right? With this federal fund rate and the FOMC statement, it's going to be kind of interesting. This is the Fed chair, the new Fed chair's first FOMC type of meeting. It's going to be his first conversation about the fund rate, right? The interest rates, which is this market over here. Well, I don't even have my... See, this shows you how scrambled my morning's been. Sorry about it's kind of being all over the place. I haven't even been able to load the chart. What a mess. Okay, so the federal fund rate is this right here. It's going to be that. Okay, so this asset, if they cut the rates, this is the rate that gets cut. Okay, so and if this drops and they're cutting rates, that's bullish for the stock market. And you could see and understand why, because when the yields drop, the bonds should go higher, right? The bonds should go higher here. And that should pull the currencies, indices higher and commodities higher and drop the dollar. Okay? That's just how it works. So that's when you see a rate cut or a federal fund rate announcement, that's what you're looking for, because if they cut rates and price on the indices is dropping and you see a logical PD array or a liquidity pool that gets swept at the same time, going into a new quarter, right? We're about to go into a new quarter. Let's actually go double check that real quick. But if you see these things align, you can tell that, okay, well, if the dollar's dropping, the yields are dropping, the bonds are going higher, we're at a higher time frame PD array that's bullish potentially on the indices. The quarterly shift dynamics a lot of times are unfolding right before your very eyes, right? And then, of course, if seasonality is bullish on top of that, I mean, just think about all the things I just mentioned right there that are in your favor for a bullish market, right? Not saying that, that's my assumption right now, but I'm just saying, right? Like that list of things, right? Go back and rewind this later on, and then, really, really go through that or ask questions, right? If you have any questions, let me know. But let's go to bar chart. So this is how you determine whether, oh my God. This is how you determine whether we are in a new quarter or not, or when the contracts have shifted from one quarter to the other. So if we go to the NASDAQ, you look at the open interest, okay? This open interest in here, once the open interest is less than the next one that's coming, that's how you know you got to go switch from NQM to NQU for the September contract, okay? But you only switch or consider switching the contracts when the open interest is bigger on the other one, right? We'll flip through and see. It's already starting to climb. You see that? The volume is already more when it comes to the next contract month. The volume, there's more volume in that next contract than there is for the previous or the current one right now. So that's already happening on the S&P. This is something most people don't understand, right? They don't know this because they're not, they just haven't been educated on it, or they just haven't went and seeked it. I've talked about it before, but so yeah, this has 1 million, right? This has 300,000. That's a pretty rapid jump from last month when it had like 12 open interest. Most of the time 0 when we're still inside the current quarter. But yeah, so keep your eyes on this. I'll keep my eyes on it. I'll keep bringing it up to make sure that you guys know when it's time. But for now, we're not going to be too worried about it, right? So just a quick glance. And we're going into a new quarter, right? It starts on the 15th or the 16th. So within the next 2 or 3 days, we should be ready to switch contract months when it comes to the indices. Okay, let me pull up the dollar. But, well, you know, let's just get started with the analysis. Okay. If you guys got any questions, let me know. Good morning, Sulphonic. Appreciate you hopping on. Good morning, Tony. All right, cool. Yeah. Okay. So again, we've had this decline. We've talked about this. If you remember back when price was in here, I said that we have to watch for this declining, right? We literally talked about it. Okay. What's up, boy genius? If this is your first time, welcome, by the way. God, dude, I got like allergies. Everything is just all over the place today. But so yeah, if you guys remember back from the last 2 weeks, we've been talking about this going lower, targeting the trendline liquidity. We said how that's going to have a negative bearish impact on the DXY. We've kind of had a small impact, right? It came up, touched these levels up here. We have a low in here. If this is going to go higher, it's going to have to get beyond the midpoint of the dollar wick here. I'd really prefer to see us get above this candle to really trust it. If it does do that, then that'll be what we talked about before in terms of deferred liquidity. So, and then of course this will have to be respected as well. And the market maker buy model we talked about will then be fully in effect to then target the highs up here. But again, that is supported if we see this going higher. If this is going lower, you notice the SMT right there between these three averages, right? If this goes lower, we should be able to see the dollar eventually go lower, right? Or have an influence to go lower. If the dollar is rallying, to trust that rally, we need this to recover and change state of delivery. Because then, when this is in alignment, you're catching a larger, longer term idea. Okay. In this case, it would be bullish. If it's going to be bearish and this just rapidly declines, which is probably going to happen because they're going to cut rates soon, probably next week, then we should end up seeing the dollar tank, right? It should not be trying to get back above this level. This should end up being the line in the sand. We'll take a look at the currencies and the highs up there, see SMT and whatnot. There's pretty solid deep analysis you have to start doing when a new quarter comes, because again, money is changing contracts, right? Assets are on the move to the other contract month. Okay, it's not going to stay in one. So there's a big change that takes place. There's lots of earnings that take place. Shit, whoops. It's earnings. Let's actually go take a look at the possible earnings coming up. Where the hell is fundamental? Where the hell did it go? News? Wait, where did the situation go? Where's the calendar? There it is. Why is it taking so long? There we go. Okay, so earnings. Okay, so Monday we have a ton of earnings. It's significant to see the companies that are in the NASDAQ, right? Earnings is another moment in price where you got to be cautious. You got to be cautious because good earnings or bad earnings is a reason for them to manipulate price. Okay. We got Accenture. Okay, we don't really have many big names that I'm too concerned about, like Nvidia or any of those tech companies. We do have Comtech. Let's see what else. So there's not really too much that's too aggressive this week in terms of the earnings. So Trading Terminal is this website, by the way, for those of you that may be wondering. It's one of my favorite news tools that I share with my private group. But you guys can check it out as well. So yeah. So we'll see what that wants to do. I'm more concerned this week with the federal fund rate and the FOMC projection. It's going to be a big time influence on where we go for the next quarter. And hey, we could pick the low of the year. What makes us think that we can't pick the low of the quarter for power 3? Right? Every quarter there's power 3, just like every year, every day there's power 3, right? So if you can get the back end information, like some of the stuff I'm sharing with you, the intramarket relationships, the federal fund rate, identify higher time frame SMT, look at some earnings and some of like the movement that's happening with some of the different stocks. Not that it's going to be a be all end all to execute on, right, when it comes to earnings and whatnot, but it's volatility injections, just like the news events, right? When earnings come out, there's an influence that takes place. Okay, there's a rapid manipulation that unfolds. So yeah, just you want to keep these things in mind going into this new quarter. Another thing that we want to pull up to before we go even further is seasonality. Okay, and if some of you have never looked at this type of analysis, or it's like your first time being here, there's a process to us making a decision. We don't just look at the NASDAQ and then just go to the NASDAQ and that's it. That's how you get blown out. Okay. That's how you get hit and miss results and don't understand a damn thing that you're doing. And, eventually you get led to failure. We're able to be correct pretty much every single week, proven live every single week and every day in my private group. So there's no escaping that this is the fact because I have it recorded and show it. But that's only possible because of how we do the analysis, especially when we're at the beginning of a new quarter. I call bias and narrative for weeks on end. Okay. And I've proven it. I picked lows of the year 2 years in a row. I'm correct on narrative pretty much every single week. That doesn't come from me just looking at the NASDAQ. That doesn't come from me teaching something in 5 minutes, okay, or 1 minute, or just giving you a buy or a sell signal. That comes from the depth of understanding and preparation that's done before we look to even make a decision on anything, or even before we look at the lower time frame, right? We're doing some back-end information it's much more important, that drives the market. Oh, shit. Okay, so just wanted to lay that out because some people are very impatient. They don't have the patience to, in all honesty, be a trader, and they have to fix that. Otherwise, this ain't an industry for the impatient gambler. Okay, it's just not. Okay, so the economic calendar, the normal one everyone uses is Forex Factory. The one that I just showed with the earnings and whatnot, it's called Trading Terminal. Maddie, I have all that stuff in the private group. Should be, I think it's in the 101 student notes section. All that stuff is readily available. I have no idea what this guy in the chat is angry about. But if you spam, you're going to be blocked. So nope, don't play games. But yeah, so getting back to the chart, like I said, if this goes lower, we're going to have to see, because we got buy side to sell side delivered. This SMT in here is going to have to be observed. And then, of course, let me go pull this up real quick so we can get that quick glance. Where did it go? S&P, okay, the NASDAQ. Okay, this right here, we are in June, mid-June, so it's somewhere in here, okay? When we get up to it, I just want to show you this real quick so you guys can, oh, there it is. So June 19th, right? So we're basically right in the midst of the seasonality, potentially setting a low seasonally, with all three lines agreeing to go bullish, okay? That would be justified if we see rate cuts take place. We will have rate cuts, which are bullish for stocks, just the stock market as a whole. And the reason being is because capital becomes cheaper to borrow, okay? When you cut rates, it's easier to stimulate the economy and business. So that's why stocks typically, not right away, but typically over time, right? After the rate cut takes place, eventually we end up at much higher prices than we were before the rate cut. Okay. And it's because capital becomes cheaper to borrow. Does that make sense? So, I mean, you can keep it as simple as that to understand why rate cuts are so significant and how it affects the markets and how that information helps you get to a decision, right? About what you think price is going to do. You want to always have that type of perspective when you're looking at things. How does this help me make a decision? Okay. How does this support my thesis and what I believe is going to happen in price? Okay. It's just one element. But when you couple that type of understanding with the historical behavior plus this historical behavior being seasonality, and then if you can have, say, SMT taking place on the indices, or you see the yields dropping, the bonds going higher, you see the other assets supporting it, right? Maybe there's more headlines about certain things that could be bullish, and maybe you're at a higher time frame PD array on the NASDAQ, and you're going into a new quarter, okay? When things start to align like that, you can, over time really see how powerful it is in terms of helping you make a decision, helping you trust your long-term narrative, okay? That's the thing. It's a multifaceted level of understanding. It's not bias, and narrative itself are some of the most complex things because it requires you to have a multitude of other understanding, okay? And you have to be observing and, mapping out and compare and contrast like multiple different things going on in the market. Unless you're just like, Joe Schmo who just wants to trade one asset, which is okay, but that doesn't mean you should only look at one asset. And that doesn't mean, you should make it so simplistic that you miss certain pieces of information like this. This takes time to understand, but I talk about it a lot. And all you got to do is look for moments in price where there's lows that form that lead to big runs or highs that form that lead to big runs. Determine where that's happening and then go and backtest that in the chart and see how many times it worked out in that way that you observed. Okay. And then every time it goes into a moment where there's a big span of all three of the historical lines going one direction, that's a strong bullish, in this case, seasonal tendency for this part of June, right? Late June going into July. Okay. Early June, right? May going into early June, there's likelihood of consolidation because it's the summer months. Depending on what happens, overall globally in the world, the times when it's going sideways, they could a lot of times be amplified to go sideways. Or if there's like nothing going on, but there's a lot of big news for companies that are in the NASDAQ or the S&P, sometimes it can go against it, but you don't got to worry about when things go against these different elements. Because if it goes against, say, a bullish seasonal influence for the NASDAQ, say it's got a bullish seasonal influence, but we are rapidly declining aggressively towards the sell side, then that's telling you that the NASDAQ is going against what it seasonally does. So that is heavily underlying bearishness because it's not following the seasonal influence. Because everything's controlled, right? Everything has a process that it goes by. And when it goes against that process, which has been proven over time, a lot of times it's telling you good information as well. Like in this case, bullish seasonal influence, if it's rapidly declining aggressively and not respecting any idea to go bullish, then you can just continue to push it lower until proven otherwise. Or at least until it hits a higher time frame PD array that may give you the interest to go in that direction of seasonality. Okay. Let me know in the chat if what I just described about seasonality makes sense. You don't need to overcomplicate it. You don't need to overthink it. Okay. It's literally just as I just described. That's how you utilize it as a reference to help in decision-making or just help in confirmation of your higher time frame narrative. I use it every year, every quarter, every month. I'm looking at seasonality. And if I'm bullish and all three of the lines agree at that particular time of the year, maybe, we're also in a time where I've seen over the last 5 years that prices respected that seasonality. I'm going to trade in that direction. Okay. And anything against that is going to be counter trend and short term in nature. and my risk is going to reflect that as well. Okay. But again, I wanted to show you this because we're going into a new quarter. We're basically doing our quarterly analysis today, right? To be able to observe, what's available and, what could be expected going forward. But it all starts from these assets, this type of information, and then understanding how that stuff works together. Okay. And so I hope I'm doing a good job of getting you to understand it. And again, if it doesn't make sense and you're new, ask questions. Okay. I don't know where everyone's at all the time, and I can't read your mind, and I don't want you to waste your time, right? I'm not here to waste your time. I'm here to give you value and help you, right? Otherwise, I would just be living my life, probably getting some breakfast with my family right now or going to church, right? So I care about you guys. So take advantage of that. So yeah, again, hopefully that made sense about seasonality and whatnot. We do have SMT here, so we got to watch and see if this order block gets violated, right? The up movement here. This is ICT's Indigo model or Indigo PD array. It's a volume imbalance right below a bearish order block. So that's looked at as one PD array. Okay. So as long as it respects that, as long as it respects this high, and preferably, right, it doesn't break from this low to that high as 50% level. So as long as this level stays intact, it could wick through it. But as long as on a closing basis it stays below, it'll keep going lower. Otherwise, if it breaks above that, then we got relative equal highs up here. The price may want to come back into. Okay, so we do have to see what the decision is, which I believe it's going to really become clear once the federal fund rate gets talked about. And so that's coming up this week. So we're waiting. Traders globally are waiting for this federal fund rate, especially because we have the new Fed chair. Okay, we got to see how he is. Is he going to be like Powell, right? Is he just going to show up and make the volatility go nuts? Excuse me. I think regardless, even if he's like one way or another, the algorithm's going to be used to viciously rip your face off because it's an excuse. That's what it is. Everything's pre-programmed, pre-engaged. So, it is what it is, right? And it's a good thing because that means we can follow along. We could catch on to his logic, which you guys see on display every single week. So yeah, so that's going to be my perspective on this. Let's actually go to the quarterly perspective, given we're going into a new quarter. Okay, let me even this out real quick. Where the hell is my dollar? It does this again, right? You guys see how it removes my dollar? I don't understand why it does that. Just throw it on the yields. Okay, so we got dollar looking like that. I want to get bigger. Okay, so dollar's retracing on a quarterly basis into the bearish order block, which is it's also a bearish breaker. It's also a fair value gap, right? Price is gradually going up. We'll look deeper into the dollar in a second, but let me actually just take a look at this. Okay, so we do got a stop run that took place up here, just simply ran up above those highs. We do have this stop run that took place below this candle. It just ran below that candle. This one ran below that candle. So it's a stop run before it went higher. Stop run here as this candle here broke the previous. This candle respected this midpoint, the upper 25%. So it pushed it higher. Okay. So we got SMT at the highs up here, bearish. Okay. Which I just noticed. I didn't notice this the other day. So we got to keep that in mind. If that's going to, if we're going to see rate cuts, this SMT on this quarterly chart is going to end up becoming significant. And this trend line liquidity for the next quarter is probably going to be attempted. We do have this order block in here. We got the lowest down candle inside this run. So you take that upper wick, see the midpoint. We're really, really flirting with that midpoint. And this candle's having a hard time closing above this midpoint of this wick too. Okay, so this liquidity in there is going to be, in my opinion, high resistance because we have a stop run here and here. It was somewhat low resistance when this was a failure swing, but now this has now went to high resistance because now it's a stop run versus the failure swing that was present. Okay. And again, this asset is significant because it impacts what the dollar is going to do. So when we do this analysis and then go to the dollar later, it's very, very easy to determine what we think price is going to do. Assuming the supportive relationship is going to be intact. Okay, but again, the federal fund rate's coming, so you got to keep that in mind. Okay, so we're watching these levels in here. If it can stay below this, I wouldn't mind seeing it take out this previous day's high here. That would be nice, a nice counterparty. Okay, I wouldn't mind seeing this this behavior where the next candle comes up. This is Friday's high. Going into Monday, Tuesday, like the early part of the week, even Sunday, when that new candle forms today, you want to keep tabs on Friday's high and Friday's low. Because again, when this candle opens up for Sunday, unless it gaps through it and doesn't stay in the range, we're going to be opening up in Friday's range. So the most significant liquidity pool is going to be the high and the low from Friday's high, or from Friday's candle, right? From Friday's range. That's more significant than any of these other PD arrays because that's the first and foremost thing that you could frame a setup against. Okay? Like if it's going to go up to the highs up here to target that, so it could then sell off later, that's still a tradable move if it does decide to go up into that level. Or vice versa, right? Say it wants to open up, race to the sell side here, try to take the sell side out from Friday's low, use that as counterparty to aggressively reprice, maybe from this monthly bullish order block. Okay. That is this one right here. Okay. So maybe it's going to use that, right? If it does go higher, that would be what would be expected. But I would have to wait personally. If it was to do that, if we did see it run down, tag this, and then aggressively go higher, I would need to see this low to that high as 50% be taken. And then once that happens, it would look something like this. I'm not saying this is what I think is going to happen, but a scenario would be with this context of this bullish order block, right? If it was to do something like this, break above this low to that high as 50% of the range. If it was to take this out, you also then take this high to that low. And once that 50% is taken out, you can now have the framework of a market maker buy model targeting those highs up there, right? You see how that kind of works? So again, that's a contingency plan if it was to try to go higher at some point. I don't think that's even possible. I mean, anything's possible, but I don't think that's likely because of the rate cuts coming. It's a rate cut. The only way for the rate to be cut is to take away from it. This is the rate. So if you take away from the rate, it's dropping the rate. Where's a lower price or a cut visual on this asset? Well, it has to go lower, right? If you cut rates and it goes up, that doesn't make any sense. That's increasing rates. And so the rate would go up, right? Because you're increasing the federal fund rate. That's what this is. That's why the bond yield market is so significant. And of course, we've talked about the relationship many, many times, including today. So again, I want to see if this can be counterparty. What I would really like to see is if it could open up like this, maybe run up above that, tag that real quick, or maybe just slightly tag it, right? Go up inside this little area, a fair value gap, and then maybe break down, see some type of stuff like this. Okay, maybe we could see, right, another bullish candle open up. Maybe we have a bearish candle in here that throws a wick, right? Maybe it shoots a wick up there, maybe tags this bearish order block with the fair value gap, and then breaks down, right? Creating, oops. Then maybe it breaks down, showing something like this. Okay. This would be like a lower time frame to the daily, maybe like a 1 hour, 1 hour perspective. The lines, and this would potentially be the actual candles. Okay, we'd have like a wick that shoots up, right, tagging this level, but closing below this high to that low is 50%. This is what I would like to see it do. Is it going to look perfect every time? I mean, this seems pretty reasonable. Seems like it would be a logical thing for them to do. But again, you know, we don't know exactly what overall it's going to look like, but I think that's a pretty highly likely scenario. And what's happening inside that? Well, they got relative equal lows here. They do have SMT, but they have this low and that low, right? That's liquidity that hasn't been tagged. They have Friday's high here. They're going to cut rates. Okay. When this opens up and runs up above this, it takes counterparty, pulls the traders in on the wrong side, and then aggressively reprices lower as they look to take profit down in this level. So they're taking buys out to pull you in, to engineer you so you could fund their trade that's going short. They then go short, and then once they get to a level where they could take profit, they're taking profit. And whoever's down here is caught caught holding the bag. Okay, this is the dance that goes on all day long, from stop losses to targets, from PD arrays to PD arrays. So again, that's going to be my perspective here. If it gets above this volume imbalance in there, which is a new week opening gap from previous week, then we'll look to try to see if it can go a little bit higher. That happening on the heels of this SMT, obviously this SMT at that point becomes a little bit more significant. Overall, if this area or this price ends up getting above this candle, that will be your full-on daily time frame change in state of delivery. So you could tell that it's going to take a little while to get there, and that's fine. Okay, but until it does that and breaks the midpoint and violates these upper PD arrays, that being the fair value gap, that being the volume imbalance, that being the order block, right, and the high up here and equilibrium from this high to that low, if all that stuff gets violated, that's the only moment where I'll be like, okay, shorts are not on the table. Okay. So I hope that makes sense. Okay. Let me know in the chat, though. One in the chat, if that makes sense. Does anyone know what language this guy was speaking earlier with that comment? Looks like he just like scribbled a bunch of random letters. But yeah, let me know in the chat. Throw one in the chat if it makes sense. Do you guys like the music, by the way, in the background? And get some feedback on that. We've been listening to this in my private group. Maddie, if you're still here, I think I answered that question, right? Just want to make sure. All right. Well, moving on to the bonds. So the yields dropping should lead us to this going higher. Okay. So we were talking about this suspension block. You guys have been with me. Those of you that are diligent, those of you that take note and pay attention, you guys have been watching me narrate this whole thing. how I talked about if price gets above this, it should come back down and respect the midpoint if it's going to keep going higher. And it's done exactly that. It took the 2025 yearly low, which is something that we mentioned, we talked about as it reached down into it. We called the move lower into that. We talked about this move being a bearish breaker, right? If you traded this asset, you could end up taking that, you could have ended up having that as an opportunity as well. But we narrated this, we talked about this, we walked it all the way lower, and now we've also ended up walking it to the buy side. And again, this has an impact and is helpful when it comes to what it is that we do on these other assets. Okay, so if the yields, the other asset we looked at, influences the dollar, this influences the other assets, and it's opposed to the dollar. Okay, so if this goes higher, normally the yields are going to go lower, the dollar is going to go lower. The indices will go higher, and the currencies will go higher, and commodities too. Okay, when all of that stuff is symmetrical and in line with one another, that's how you know you're in a very, very, very fun environment to trade. If it's not like that and things are all over the place, you're going to find that it's a little bit more tricky to solidify what it is that you think is happening, or have the consistency you're looking for in terms of price expanding aggressively, because symmetrical markets are needed for things to be in a trending environment. Things have to be in order. Sometimes trends happen without it, but you want to know a way to map out when this is the case, right? You want to be able to corner price and know I'm in a fast-paced market, so I can maybe, have normal leverage, or maybe even increase the leverage at some point. Or we're in a market that lacks symmetry, everything's doing whatever it wants, so maybe I need to cut back on my risk because the conditions are a lot less favorable than they would be if it was a symmetrical environment. Okay, again, most people don't think this way. Most people aren't looking at these assets, but that's why most people don't have the results that we have. That's why most people can't come out and do what it is that we do, because they just don't have the tools, right? They're missing things that add to clarity and effectiveness because they're impatient, or whatever their excuse is. You know what I mean? So you guys don't have to be that way. Okay, you guys are here with a community and a person that puts on display the result of having that depth of knowledge. And again, I hope you guys continue to get value and utilize this stuff, right? Avinity, good morning, by the way, bro. Lo-fi feels like we're relaxing while watching chart. Yeah, we're just hanging out, right? We're friends, right? I assume you guys look at it that way. I think y'all are friends. Family, pretty much. I don't have a big family. I just have my mom and my little brother and my daughter, and I don't have nobody else. I don't have a big family. So you guys are like my family, yo. That's why I'm cool spending a lot of time with you guys, especially those of you in my private group. I have friends and whatnot, but family, I don't really have much family. It's up to me to repopulate my family tree, right? And that's definitely a work in progress. That's for sure. So yeah, that's why I pour so much into you guys, and I'm always willing to answer questions. I'm always, here to try to do things for you, and that can't be said about a lot of these mentors on social media. They could really care less. So yeah, I sincerely care about you guys, your guys' success. So if there's ever any doubt, or if you're new and you don't know the vibe here, that's the vibe you can expect. I'm not here to sell you a bunch of nonsense. You don't have to join my private group. You don't have to do any of that, right? If you want closer ties with me, more resources, more of what we do here on YouTube, then of course that's there. And if you want one-on-ones, I can only do so many one-on-ones. I already, every single day, have like 5 one-on-ones a day, 3 hours each. I mean, it's crazy, right? But again, I want you guys to succeed. So I know that a lot of students need that, and I'm more than happy to do it. You know what I mean? So at least for now, right? I don't really see when I would stop doing that. I probably won't, because I really enjoy it. It's really difficult, but it's a challenge, right? I get to help you solve your problems. And it proves to me even further that there is a solution to everything, you know? So yeah, hopefully you guys get that realization too. Let me see, last week's live calls or live sessions were live changing. Yeah, bro, literally think about the context of this, right? I was live. I chose the right week to go live, right? Well, we do it every single week anyway, but 3,000 points is pretty insane. The last time I got that a huge call out like that went that fast was last year with the tariffs. We called a 1,200 point move, which I caught 500 points on. I didn't catch 500 points on this last one, right? Just took what I normally get and get out, 75 each day and got out. But yeah, last week had the opportunity. I called at least 35 trades, at least, right? If you go back and look at all the moments in the live calls where I'm like, this is probably an entry. This is probably an entry. This is probably an idea. Watch this go to here, right? I did it over and over and over for 4 days straight, like on here on YouTube. Again, I'm going to do that once a month, right? I'm going to offer that to you guys once a month. I know that I got a lot of really good feedback. Again, it's not shocking. It's shocking how aggressive it was, that's for sure. But it's something. This is what we do. This is the vibe. And I have many private students that come out and say it. That this is an everyday occurrence, right? We're not perfect. Sometimes we take losses. That's fine. But we know where price is going to go. Even if the execution gets taken out, we know where price is going to go. And if we wanted to get in, we can. But we have rules, okay? Just because you can doesn't mean you should, right? Because all it takes when you have bad habits, like ingrained in you, is one day to ruin like 5 years of experience, months of mental like practice, right? And motivation gets wiped away because of one day that you chose to fall off the rails. Because you look at your account and you're like, damn, I just worked so hard to get this amount and I just gave it back in one day. It took me 5 months, 4 months, a week to get to that amount. And I just let the market take it in one day, and many times in one trade. Like, just think about that perspective. That's hard to deal with. But whose fault is it? It's ours if we do that, right? Just like it was our fault that we end up making whatever it is that we make. It's also our fault, and we have to take accountability when we take losses, right? If you take a loss, it's not the end of the world. You know, it's just a loan that you're giving the market to get better insight, right? For it to tell you that you were wrong, and you cap the risk. And then later on, right, you're able to get it back slowly, right? When you get out of drawdown, you want to go slow, right? So, and when it's potentially going into drawdown, you want to get out fast, right? You want to know quickly. And we give you tools to be able to do just that. But yeah, so again, getting back to the chart, with the yields going lower, this going higher, the only way that I'll look to see this go lower is if we were to change state of delivery here. Again, which is just simply price breaking down through this open price of this bearish order block, okay? I'm assuming, given the suspension block is being respected up to this point, I anticipate that rate cuts are coming soon. I don't know if it's going to happen on this announcement coming up, but yeah, we'll see. We'll see what happens. But if we do get the rate cut, excuse me, we will see this rally. Because again, rate cuts push the stock market higher, right? If the stock market's going higher, this by default, because they're interconnected and influence one another, they're going to fall in line. They're falling falling in line with one another. Okay. It's the way it is. It's not even something that can be argued. That's just the dynamics of the market. You know, it's not my opinion. I didn't make it up. It's just the way that the market is connected. Everything's connected in one way or another. Okay. Some stuff influences other things more so than others. This has a highly, highly aggressive influence against the dollar, so inverted to the dollar, and positively correlated with the foreign currencies and the indices. Again, you can't escape this fact, and you see it every single week. More so sometimes than other times, because sometimes it's cracked in correlation, which again tells you something about the market. But it's significant. So if you haven't been studying this or you've been discounting it, even though I talk about it every week nonstop, I suggest you make an adjustment and take screenshots of these assets and watch them every week, because that's one of the only ways you're going to see it, right? Is if you screenshot it at the start of the week and then review it at the end of the week. Did the relationship go hand in hand, or was it cracked in correlation? If it was cracked in correlation, what did that do to the market, right? What did the indices, and the other assets do if there's a crack in correlation with the bonds and yields, or if the bonds and yields were consolidated? Many times that's not going to allow the other assets to rally or even decline. It's going to be holding them, because again, one of the requirements, my requirements for a trustworthy, let's say, rally is market symmetry. Okay? Because if it's symmetrical, we know everything is in alignment, and it should be big price swings because it's a good condition, right? Everything is operating as it should be. Everything is where it should be. Okay? And when it's not, again, the biggest takeaway from seeing that things are not symmetrical is you cut your risk. The risk is elevated. Easiest way to know, is the risk elevated? What are the bonds and yields doing? What are all the assets doing together? Are they correlated or not? And if they're not, lower your risk. Okay? Expect that it might be a little bit more challenging. Okay, so again, this will be my line in the sand, the suspension block, midpoint, and the low. If this was to break down through this area, we will have this little itty bitty propulsion block. So not itty bitty, but a little bit small. You see this? This is more so the indigo model in here. It's kind of got two overlapping PD arrays, right? The indigo order block with the volume imbalance there in the order block, plus this order block that's inside that, which is a suspension block. So we don't want to see these levels get taken. So we got two PD arrays just simply sitting in there. And then we got the low and then this up candle, right? We have sell side, buy side delivery. So if it's bullish, plus we're above the suspension block, we should not see this price delivery go below this low. If it does, we're probably taking out this low. And then we'll come and wipe some of this liquidity out. But again, it needs to do a lot in order for us to do that. If it does that also, it's going to reclaim this suspension block as a bearish PD array instead of a supportive bullish PD array. Okay, so these are things we're going to monitor. If this was the NASDAQ, it's the same stuff. I'd be thinking the same thing, saying the same stuff. It would just say NQ up here instead of T-bonds. If this was the 5-minute chart, instead of the daily chart, I would be thinking the same thing, right? These same levels are the things I'd be looking at, right? And of course, you have this trend line liquidity up here. If it's bullish, that's going to be the draw. We are hitting a bearish breaker in here, so we got to be kind of cautious. Low, high, lower, low. It's respected it up to this point. But again, once we close above this high here, we have a high, low, high failure swing. A break above this high creates this lower movement to upper movement as a type 2 dealing range. This high, once this gets closed above, I think, in all honesty, given the anticipation of a rate cut coming, the peak above this high is enough for me to believe that as long as these levels stay intact, this is going to be my main draw on liquidity. Unless we're proven otherwise, right? And I hope this makes sense, why this is the way that I'm thinking. Again, all this stuff I talk about constantly, the way that I'm navigating. Alvinity, you're welcome, brother. You're welcome, by the way. Yeah, hey, hopefully Tony crushed it last week. Hopefully all of you crushed it last week. It was pretty nice price swings. Pretty scary for some people that have not been a participant or seen a move like that, but It's nothing to be scared of. What are you scared of? I ain't scared. You shouldn't be either. You should be scared if you break your rules and you don't know how to not overtrade and over leverage, which is just simply a decision that needs to be made, right? Then you have a reason to be scared. But if you don't do those things, you realize over time, what is there to be scared of? There's nothing to be scared of. Taking a loss is part of it, so yeah. So before we move on, again, I didn't mention this on the other asset, but I'll mention it here. I guess I did. But the most significant liquidity pools you're going to look at is obviously Friday's high and low. We mentioned that. So that low right here might end up being counterparty, like I talked about on this other asset. It may look to open up, rally up, take that, and then go. Preferably, if it's going to go lower, we wouldn't really want to see it get up there. I'd more so like to see this wick midpoint get respected. See the new candle open up, try to get through the wick, but then fail on a closing basis. That'll show that this run higher to lower, being a balanced price range, is now being fully respected in the lower 25 to 50% from this low to that high. Okay, that should be a balanced price range if it is going to go lower. There's lots of gaps in here, so I'm not necessarily sure if they've no, they didn't fully fill that little piece in there. So if this does end up breaking through these levels, that's going to be what it draws to. But we'll see. For now, we're going to keep the assumption that this is going to try to go lower. Same thing here, just the other way, right? When we open up, preferably if this is going to go bullish and be aggressive like we want it to be, we need that wick to be respected in there, along with the upper portion of the suspension block. Okay. So again, hopefully that's clear enough. We do see, I'm actually take this change in state off, and I'm gonna actually leave this one intact. Remember what I was talking about the other day about the stutter candles that have consecutive candles? That stutter candle is the official change in state on this time frame. You have an early stage of changes in state with these initial ones being taken, but this displacement through this candle here and these consecutive down candles, that should act as a balanced price range. Okay, so sell side, buy side. So technically everything up to this high, lower, should be balanced. So if we take this high up here to that low, if this is going to continue to support that our thesis going higher is correct, our bias and narrative is correct going higher, the midpoint from this low to that high, given that there's sell side delivery that happened and buy side delivery that was then offered as well, this upper 50 to 75%, preferably the upper 75%, because it's in alignment with the change in state and the upper portion of this suspension block. Okay, it's a 2-day suspension block for those that may be wondering. This should hold because of those reasons. And if it doesn't, it's telling you that it may not want to go higher. So you have to be flexible and then start to aim at lower prices. One thing I do like to see is the fact that we created a fractal low here. Right, we got higher low, lower low, higher low. Okay. So again, this is the suspension block in here. I like the swing low that's been created in here. Okay, so this should act in a similar way. Oh, it should act as an intermediate term low. Came down into a gap. Okay, so I'm actually classify that as intermediate term. We have a lower high to the left, or a higher low to the left, lower in the middle, and then we got a higher low to the right. So if that respects this and runs, that confirms that as an intermediate term low. Okay. Again, intermediate term highs and lows. In this case, the low is it's a low that goes into a gap, a fair value gap, that has a higher low to the left, higher low to the right, lower low in the middle, and then displacement away. Right. So because of those factors, this is an intermediate term low. We have a short term low there. Okay. So I would like to see the fractal low form in there. If we go to 16 hour, I think we already have it. No. We have it. Yeah, it's beginning to, oh, I guess it already formed then, huh? Got a fractal low there on the 4 hour. That's good enough. But yeah, once you see it on the daily, it should be good. So yeah, with that being said, these are my opinions on the bonds and yields. So let's now take that information and move over to the DXY. Okay, so if we were to, oh, I guess we could go like that. So what I'm looking at here, before we look at other stuff, I'm looking at this, the high right there. Okay, let's take some of the drawings off. Okay, so I'm looking, oh, let me pull that up. Okay, so looking at this high, we have a higher high in here, and we have a lower low in here. So now what we're going to do is we're going to go to the currencies and observe this, right? We have a higher low, okay? So if things were symmetrical, right? This has a stop run. Oops. Oh my God, where did it go? Okay. Okay, so there's a higher high in there. And we have a failure swing in here, right? So there should be a stop run if this was going to be symmetrical, okay? But it's not. The euro is creating a failure swing. GBP is creating a failure swing while the dollar is creating a stop run, okay? That's a form of SMT, okay? This has a stop run while the other two don't have a stop run. They have failure swings being created. Bullish, okay? And the dollar has a bearish SMT in that instance, right? So it's like looking at this, right? Let me see. If the euro and the dollar are together, if they're reverse correlated perfectly, right? If the dollar does this, the euro should do this, okay? If it's symmetrical, okay? That's not SMT in there, okay? What is SMT between the currencies and the dollar is if the DXY does this, creates a stop run, but the euro does this. GBP does this. That's not symmetrical, right? It's not perfectly symmetrical. So that is something that you got to pay attention to. That relationship is significant. Because when that happens at a particular level that can promote a turning point, like a higher time frame PD array or some other liquidity pool, especially, key point here, going into a new quarter, a quarter that's been going one-sided, okay, that can result off this larger time frame SMT in a quarterly shift or the beginning of a quarterly shift. And then you obviously can add seasonality when this stuff happens, and it adds an extra layer of confirmation, an extra layer of certainty that one thing should happen over another. Okay? So with that being the case, okay, you guys see that. So we want to make sure that we are keeping that in mind. Okay? Does that make sense? Let me know in the chat. I know this is it's a very confusing topic. It's very confusing. SMT is a confusing topic for some people, but that one in particular, because they're not correlated, it's a little bit tricky sometimes to adjust your mindset to see that correlation, right? Or what you should be looking for with SMT between these two different asset classes or two different assets, the currencies and, well, foreign currencies and the dollar. So yeah, we got that SMT there. Okay. So let's keep that in mind, all right? So again, that will be confirmed if we can see this wick getting given up. The breaker here on the 1 hour or 4 hour getting respected on the dollar. Okay. So yeah, if we get this to hold like this, because we have SMT, because it's at the start of a new quarter, things may become pretty interesting, right? We may be able to grab the tiger by the tail and catch this thing dropping aggressively, which would then again promote bullish indices, bullish foreign currencies because of the SMT factor, because of the seasonality factor. Remember what we looked at earlier, okay? There's some type of low that forms in the market that leads to all three of the indices going higher, or all three of the years, 5, 15, and 30 year basically going to the buy side. This is an accumulation of the last 30 years of data and what's happened seasonally in the marketplace. And so once you're able to then take that and align it with things like what we just talked about, like SMT between the foreign currencies and the dollar, rate cuts coming around the corner, which is bullish for the indices, the stock market in general, bearish for the dollar, right, which is bullish for the foreign currencies. You can see how the picture starts to align. These confirmations, how things start to slowly get into alignment, right? Can you guys see that? Let me know in the chat. Give me a 1 in the chat. This is somewhat, advanced concept, right? It's a depth of knowledge. It's not just like, oh, I think it's going to do this or do that. This is how we can know if certain things unfold with the highest possible level of certainty that price is going to do something versus another. So yeah, let me know in the chat. Throw 1 in the chat. Okay. Appreciate you, Fritz. Good morning, by the way. So yeah, if this makes sense, beautiful. Because this stuff is very important. Okay. So yeah, as long as this wick stays intact, right? We're still inside this level here. The dollar is still responding off this 3-month quarterly breaker from 2024 in September, right, of 2024. We're using a PD array from 2 years ago, right? Like, think about that. Do you think anyone else on YouTube is probably even looking at this? I know ICT is probably looking at it. I know he is. He spends most of his time on these large time frames, including the quarterly and yearly perspective, right? But this is foundation. You know what I mean? It's foundational. So yeah, if we can get this thing to hold in this area, break down, and then also invert this level, that'll also further justify our belief that things are going to go lower and the currencies are going to go higher and the indices will go higher. Okay. And we could trust it until proven otherwise. Right. So we're in a mode where we got to kind of wait to see what this is going to do, see what's going to be a result of the rate cuts. But we have a foundation here for the dollar. Okay. Took stops there. Might as well put this on the chart. So again, Friday's high and low is significant. You got to watch that. Okay, so the high and the low. This is the weekly low here and the weekly high. So before it gets down into these levels or before it gets up into these levels, right, we have to see, this high and this low, this high and that low, when they're going to be targeted, because those are the near-term liquidity pools. And you could literally take a trade on one of those levels, right? You don't even really got to worry about much else. Who knows if it's going to get up here, right, for a new trader? Who knows if it's going to get down here for a new trader? Who knows? And honestly, who cares? What really matters is which side is it going to target This one or this one, right? Which high is this? Is it, or which high or low is it going to target here? This one or this one, right? If it takes this one out, it's going to take both those liquidity pools out, and it's going to invert this fair value gap. And that's going to have respect to this wick. And we have SMT, and we have rate cuts, which are bullish for the stock market. What else? I mean, that alone is a lot. like that's a lot supporting the idea of this level holding and going lower. Assuming that it continues to respect that. And again, if it does not respect that, maybe they're going to take a little bit longer to give this response, because this is the higher time frame after all, and we're ahead of some of this stuff that's going to take place. If it takes a little bit more time and it breaks through, that's great. We invert this wick. We use this fair value gap as support, and we look at this open price here as a change in state, a full confirmation that we're now in line with price trying to then reach up to the buy side and our projection level that we made from this low to that high. Okay. And it'll also be a market maker buy model. This, if it breaks up above this high, will have proven that this was deferred liquidity. This was high resistance. Okay. We ended up trading into that high resistance level. It set a low, ran up one more time, then took that low. So these guys are pulled into the market. So if this gets above this candle here, right, or just simply above the wick here, say it closes aggressively beyond that wick, it really shows no respect, then again, you just simply adjust and then look to target for the buy side until we lose like this fair value gap, right? This fair value gap being taken fully confirms, in my opinion, that we are going to go lower. So you can wait for that. We are closing at the midpoint, so it's a bit sus, slightly. So there is still a chance, right? The price may not want to immediately break off. This order block here, right, it's going to be an order block when this next candle comes out, especially if it goes up and just wicks through and then breaks below that. That right there in itself will be a change in state of delivery too. Merge that with the low being taken, change in state taking place, inversion for value gap, and respect to this wick. Those are things that you'll know, including the SMT. Those are things that help you know that we're going to end up going lower. Okay. So again, just wanted to reiterate, make sure that every point is making sense. That's why I repeat certain things. I want to make sure that it is really being driven home, so you don't have the excuse, oh, I missed that. Oh, I didn't hear you say that. Well, if I said it 5 times, it's going to be kind of hard to, to miss that. So yeah. What open price is that? That's from April. Whoops. Why is that still there? June. Okay, so June. So the open price for June was right there. So we got that monthly open there. Monthly open for June. Wouldn't it be interesting if this does end up breaking down? We would have accumulation, manipulation, distribution from a large perspective, right? Can you guys see that? We talked about accumulation, manipulation, distribution here, right? Accumulation, manipulation below that low into the fair value gap, into the monthly reclaimed bullish fair value gap from way over here. Dragging it through, using it, even though it's been traded multiple times. Still sensitive, still relevant when you're in that area, because most of ICT's PD arrays do not expire. You could use stuff from a year ago, as long as it's in that area, right? It's just further confirmation, right? And then you got the displacement there, came back down. I told you guys that this should hold as a bullish breaker. That should be distribution, and what do you know? We were correct, right? So yeah, this is my thoughts on the dollar. So hopefully all that stuff makes sense. This right here, I believe, is a monthly wick. Yeah. It's that monthly wick. So the upper high up here Actually, just place this just so you guys know. Have it as reference. Get pink. The pink color is the monthly levels. For those that may not know, anything that's pink on the chart is a monthly reference. Anything that's blue is a daily reference. And any other colors are timeframes that are not those timeframes. Orange, I should probably change that. Many times I keep orange as the quarterly perspective, right? Like it is down here. Quarterly suspension block, right? Which was used constantly. Okay. So yeah. Do you guys have any questions about anything before we move on? Hopefully I made it pretty clear. Again, this is all just like an addition to what we talked about last week. Nothing's really fully changed except the fact that we now have SMT. We now broke down below this wick. If this is bearish, again, this wick followed by displacement that closes outside of it in itself should act as a BPR. So that's why this level right here is going to be important. So do you guys have any questions? Freaking back hurts. Okay. All right, perfect. So now we move on to the currencies. Okay, we got these equal lows down here, but again, if the dollar is going to go higher, it's kind of a shit show in there. Okay. June 5th. 1st. So we got that monthly open right there. Mind you, we're not even through the month yet of June. We're midway through the month of June. We've had accumulation, price manipulated lower. We did leave these equal lows down here. We do have, let me see. So yeah, there's SMT here. See how this low is all the way down here? And if you look to the right, that this low here on GBP is this low here on the euro. So you can see there's clearly SMT there. Not only is there SMT there, but there's also SMT at these lows with the dollar. And again, this is ahead of a rate cut. So things are starting to align, right? Okay. So things are starting to align. Yeah, you definitely want to watch that beginning Fritz, because I talked about lots of very, very significant back end stuff. I mean, it's just very, very powerful stuff. So yeah, we got this inversion fair value gap. I think that we will be able to hold that. If it's bullish, it's going to have to hold that. And if it does, if we get above this high up here and it inverts this daily, where the hell's, oh, that is right there. Actually move that real quick. So yeah, if this gets above this, again, I'll be seeing this as accumulation, manipulation, distribution. You see how in that situation, there's a smaller one too, right? Accumulation, manipulation, distribution, rebalance, redistribution. Okay. kind of had that same thing here, right? Accumulation, manipulation, distribution, right? We have type 2 dealing range, right? High, low, high, failure swing, failed to break that low, got above this high, so this high became a target. That's kind of how it operates. That's how it works with type 1, type 2 dealing range. In this case, it's type 2 dealing range. This low, high, failure swing, once it broke above, that became a mitigation block. Low, high, failure swing, break above the high. Drag that over, it's a mitigation block. And you could see the respect to it. Okay. Again, we got this stutter candle in here. We've essentially changed state of delivery already, right there. So we'll see how much that wants to hold up. And so, yeah, if the dollar, does what we talked about, if the bonds and yields do what we talked about, this whole area in here, this whole setup going higher, right, should unfold, right? It should be able to unfold pretty nicely. Okay. And then again, if this high is taken out, my whole focus is going to be right here. And I would like to see something like this unfold. This is a failure swing. So that's going to be low resistance. And we got relative equal highs up there as well. So we'll see. I think that's pretty high up there, but things get real dynamic. Nothing's unreasonable, right? Okay, so that is my opinion on the foreign currencies. Do you guys have any questions about that? Again, if this breaks back down below this fair value gap on the euro here and the dollar rallies, then of course we have all this stuff down here as a failure swing, and that should set up a market maker sell model. And this will have just been a retracement. This high to that low came up to 50% of that range, this high extreme to that low extreme, and then it would basically reject. And then we'd use this. Okay. More specifically, though, we'd use this. That'd be more important. We also have a new week opening gap in here from a while ago. From in here, I guess. I'm not too sure. It's probably on the lower time frame. More precise on the lower time frame. So yeah. Let me know in the chat if it makes sense. Just throw a 1 in the chat if everything makes sense. All right, appreciate you, Fritz. Okay, so now moving on to the beautiful indices, and then we'll move on to XRP. Okay. Let's actually move up a little bit. So yeah, we'll see what happens here. Okay, so we've had a change in state of delivery. Okay, we've had our the mob order block that I talk about, right? Wick, after a stop run, we got huge displacement taking over the whole candle. It's also the indigo model, right? We have the volume imbalance with the order block coming down, respecting that. We talked about this live real time last week, so it's not hindsight. Didn't just put this on there. Price is running up towards this high. Obviously, that looks pretty reasonable. It's like, oh, Yeah, looks pretty reasonable. Something you do want to keep tabs on though is this. So what is it? Weekly? Weekly. So that's our bearish weekly order block. Gonna want to keep tabs on that. Again, if this is going to go higher and do like what we talked about with all the correlation and all that, and it's a healthy environment to go up, which it very well could be, right? The breaker in here, this candle, it's not really showing respect to it whatsoever. We just came down, swept liquidity, hit this weekly fair value gap, midpoint perfectly. Like you can't get any more perfect than that. It's right to the tick. And then it reversed. So that weekly fair value gap was retraced to price closed inside of this low. It didn't break that low. So it closed inside that low. The next candle swept previous week's low, used it as counterparty, just like how this one used this one as counterparty before it dropped. This one was used as counterparty here when it dropped and went higher. So people are pulled into the market down in this liquidity pull down here, which we classified as low resistance because it was a failure swing. And then we saw this take place, right? Stopped out the daily high, and that's when we called a 1,600 point move live, right? Is having closed above 50% of Tuesday's wick add? Yeah, it definitely adds a level of concern, because if it's ideally bearish, if that's what you want to see, you don't want to see midpoints of PD arrays being closed above, right? Especially with displacement, because if that's the case, then that PD array is not being respected in the way you want it to be. So it may be doing the opposite opinion, right? So the same with change in state. Change in state of delivery, like when you have an order block, like when it's going to start the order block, you don't have to have it close, right? You don't have to have it close above the order block. You just have to see it get through it a little bit. If it makes you comfortable to see it close, then that's fine. That's a personal choice, but it's not required. It's not required in what ICT is taught. He's specifically came out in a couple of videos saying that order blocks do not need to have a closure to start the change in state of delivery. What does need to have a closure is fair value gaps, especially inversion fair value gaps, right? Like if we're going to see this act as an inversion fair value gap and you want to confirm that it is in fact an inversion, then you got to see a candle close outside of it. Then on that candle, when it closes, any return back down into that inversion can be trustworthy. Okay. And then you should, in that retracement, coming back into it, still see the midpoint of that inversion get respected, right? And once you confirm that, right, depends on the kind of trader you are too, right? Like if this wouldn't be enough for you to trust it, I'd say this wasn't enough. Well, guess what? You have change in state, respect to that, inversion fair value gap, and then you have a double change in state right there. So there's nothing wrong with waiting this long, right? You have three things going for you if this happens. Okay, you have stop run, first of all, weekly fair value gap reaction. That's why it's such a large response. You have a breaker, high, low, higher, high. You have a large wick with displacement if it gets beyond that. So that's a balanced piece of price delivery. If we get above this inversion, again, you then have an order block that forms. You're anticipating respect to that level. And then once you get price to get above this, even a little peak above it, given the fact that order blocks don't need a closure outside of the candle open, you could put a limit order there, and that could be an execution. Stop goes below inversion. If this was the 5-minute chart, I'd be thinking the same way. Right? I would think the same exact thing. Right? We would just be working inside of a larger move that's taking place. Like this weekly candle being bullish, if we look on the 5-minute chart, this may be at the low and, getting started pushing higher. This has many things going for you, right? Sell side to buy side. So all of this sell side's balanced. You also have this high to that low, right? When it comes up to the high again, we have a rejection block up here. Okay, so that's a rejection block. That's a draw on liquidity. It's a PD array. If it's going to be a market maker model and it's going to go higher, you have sell side, buy side, all of this lower sell side, because it now has buy side offered. So it's satisfied both sides in this lower portion. That's all balanced, right? And as it prints through that range, it's balancing out all this sell side that was offered, going back to the buy side, right? That's how you want to think about it, right? But this high to that low, once it breaks above that high, it's going to be a balanced price range with a stop run, with a change in state of delivery, with an inversion once it gets above it and closes outside of it. And then any return back down into it, you should be confident that this lower portion should not be traded to. And if it does, say it reclaims this fair value gap and breaks below it again and closes, then that now turns from an inversion to a reclaimed bearish fair value gap. And then your objective will be these relative equal lows, or any daily lows that are in close proximity to that area, right? Once that happens, maybe it could be this low, right? So on and so forth. And there's other lows in here too. If you drop down, hourly lows, all that stuff. Okay, Alvinity's question is, when we are near expiration of NQ or any other asset, right? I usually see prices a little harder to read. Yeah, no, we've already had a rule, right? Stated for the last, since the beginning. ICT says that you have to classify the week before, week of, week after the new expiration going into the new quarter as low probability, because money is shifting. And again, every 3-month candle has a power of 3. So when you say, oh, at the beginning of a quarter, it's harder because it seems like it's more consolidation accumulation. That's because it's starting the 3-month power 3 delivery. What's the first stage in power 3? Accumulation and manipulation. Well, accumulation first and foremost, consolidation, right? So that should flick a light bulb on in your head right now, about how power 3, you're getting caught in the power 3 behavior if you've struggled at the beginning of a new quarter. That's why it's low probability. That's why it's classified as low probability and a harder to trade environment. That's why you wait a little bit. So hopefully that makes sense. Hopefully that kind of pieced together that observation you have, Alvinity, because it's valid. You noticed the right thing. So yeah. So again, this is what we're going to be watching for. All right, yeah. Hey, I'm glad to hear that, brother. I'm glad to hear that. Waiting for the candle to close on all time frames. Which one? Which candle? Waiting for the candle to close on all time frames. Yeah, when it comes to fair value gaps, you definitely want that closure. You want that closure outside that range. Well, inversion fair value gaps, right? And reclaimed fair value gaps. My problem is patience, and it leads me to chasing. What do you think? What do you think is the origin of that patience issue? Is it, I want to get to my goals faster? I'm not satisfied. I don't think I'm going to catch another trade setup. Like, what makes you not patient? What is the root cause? Yeah, Tony, in some cases, yeah, for sure. Not satisfied. What makes you not satisfied? Remember, most people, 99% of people, don't even make $1. at the end of the month, let alone at the end of the week, at the end of the day. Like they never finish with even a dollar, even 50 cents. They don't even finish with. And also I see a lot of profits and don't take it wanting more. Yeah, hey, there's a reason why I say 20 to 30 points, Tony. That right there is part of the reason. You know, because it takes time to be able to capture these big moves because you have to frame them on the higher time frame. Right? The more you frame them on the higher time frames, the bigger the price swing is going to be for your trade setup. Versus being on the 1 minute, 5 minute, and thinking that because it was a big candle that formed, it's just going to go higher because it looks like it is on the lower time frame. If that lower time frame is not lined up with, say, at least at a minimum, a 15-minute framework or PD array that's reacting, like pushing price, most of the time you're gonna get caught up before it makes the big move, especially if the timing element is not correct, right? Which again, you just wait for macros in that first 30 minutes. Yeah, the whole patience idea, it kind of comes from maybe holes being in your overall decision making, right? Like what has to happen in the chart for you to have an execution? Because it's not going to happen every 5 minutes, right? The best of the best idea that you can define based on what you know, what you like to do, it's not going to happen every 5 minutes. There is a move every 5 minutes, right? There is a move, right? We're able to highlight the fact that that's true. But the question is, have you practiced those extra things that allow you to take part in those? Because if not, right, it's kind of just swinging for something that's not understood yet. It's like trying to do someone else's job at your job, right? Yet we have roles for a reason, you know. Just because someone else is getting paid to do their job doesn't mean that because they're getting paid, we have to go do their job so we can get paid, right? That amount, right? So you got to define what your job is, right? What is your suite of weapons? Everyone has to start with one at first and master that for at least 6 months to a year. Every model that I have like 6, 7 technically. I have a lot of them. I only use like 3 or 4 of them though. And mainly I'm looking to take one. I'm looking to find one setup that I like. Based on what I see price doing, I'm looking to take one idea. Looking for one. But again, I've had this year 7 years of experience. And every model that I've added to my arsenal, I've used 6 months backtesting period before I even took one trade in whatever model I use. So I knew about all kinds of different PD arrays. I knew about all the different stuff. But when I was, learning from people that are much smarter, have much more experience than me, they forced me to use one model, or they were going to refund me, which was thousands of dollars, and say they couldn't help me. It was either follow what they were saying, or I'm going to lose a mentor who literally is really going above and beyond to help me. Right? That was the choice that was given to me. And honestly, I think I needed it because I'm very stubborn, until I, have grown and started to be a little bit different, change my way that I think. As uncomfortable as that may be at times, it had to be done. Because again, this is life and death. I'm either going to do this or be homeless. That was the goal. Right? That was the overall perspective that I still have. It's either this or nothing. Okay? So I don't have room to do these things that cause damage to me, that I know are not good for me, that I know that most profitable traders are talking about, right? That are bad for us, right? We know what's not to be done. And for some of us, you got to make it drastic. You got to make it very impactful. I'm not saying, don't have a backup plan if you have one and that's what you're comfortable with. This is just what I had to do. So something drastic has to be put in place, like a realization has to be put in place when it comes to patience, discipline, following the rules, risk management. Because without these things, again, it's going to be impossible to long term be successful. Those are the main reasons why people can't do this long term and succeed. They can make money, they could see it happening, they can call the market, they could do this, they could do that, but they just can't keep the money. They can't keep the good things that happen. They may have a good trade setup, but who knows if it'll be there next week, right? And who knows, right? If we do all those bad things, right? The over trading, over leveraging, not being patient, taking ideas that are outside of our rules for the moment, right? Trying to take models that are not part of the model that we're mastering for 6 months, right? Before we add others. You know, I'm very well versed with what I do. I have multiple models, but that doesn't mean that you should right away come out and try to take multiple ideas, right? I only call out or take 2 of the multiple that I call out. I pick 2, right? And if I can't, you know, secure one of those 2, in 2 of the ideas that I send out, right? I don't care how many I find. If I find 10 setups in a day, that's great. I'm only taking 2. Period. Right? I mean, think about how rough it is to sit there and kind of identify 10 trade setups, and you only took 2, and maybe you only took 20 or 30 points, but you regularly see moves that are bigger, right? Sometimes it shows that I could have waited and I would have got a bigger swing, but I'm forced to be disciplined. I have to, or I'm going to fail. Even though it looks right, it just takes one time to blow it all out. It takes one time to slip back into bad habits, right? And that it takes that one day that you had a bad day, right? Oh, I'll just make it back. I took a loss. I'll make it back. I don't want to feel this way. Oh, I made 30 points today, but I don't feel like it was enough. I'm not satisfied. Let me go back in and take 3 more trades so I can maximize. I'm clearly correct. And then all of a sudden we're wrong and we're 5 trades in and we lost all the money that we had and some, right? Blew off the last 5 good trades with one day, right? And it's a cycle. It's a repetitive habit that happens. And it's hard to break bad habits until you face it head on, deal with the uncomfortable feeling, right? And then over time, you see the progress from doing these types of things. And so it becomes easier to follow the rules. It becomes a habit to follow the rules. It becomes a habit to be patient, not worry about missing a trade. There's no reason to miss a trade, or no reason to worry about missing a trade. You guys see how many trades I call out, right? That doesn't mean that you'll be able to do it right away just because I'm showing you in these live calls, but I'm giving you the logic so then you can eventually, after the live calls, go in and study and then see if you can find it on your own, right? See if those other setups make sense to you. And then eventually, with the natural progression of things, it becomes part of your journey, and then you can add to your arsenal. But again, you have to have a rule. If you're taking my advice, right, my opinion, I have a rule. If I'm ever going to add anything, because every model has its own quirky characteristics, its own strengths and weaknesses, its own rules, you have to allow six months. For me, it's been 6 months. Anytime I tried to use stuff before I practiced it for 6 months, the results are not what I wanted. And I don't have time to be losing a ton of money practicing. Okay. I don't have time for it. And we have enough, right? The stuff that I talk about, right? We have more than enough. I don't even need half the things that I use. But, I like to know that I know that I know, right? And when I'm in, I don't want to be worried about it. I want to know that the preparation set me up for success and high probability. And if I miss, I know I have something I can get into. And if you have one model and you miss a trade setup, it's okay. Move around in time frames and then see if there's another continuation variation of your model or an inversion of your model. Say you get the first trade set up wrong and it goes the other way. Okay, use your model just to the inverse. Every model has 2 models in it. So again, there isn't a lack of setups. But because that's the case, there's no reason to be impatient either. It's going to come to you. It's like a bus. You guys see every single day. Those of you in my private group, we're doing it every single day. I did it all week last week, showing you guys here on YouTube that it's not a twice a week thing. It's not a once a week thing. It's not a once a month thing. It's every single day these things are happening, whether you have 1 model or 10, right? Because everything's fractal and there's continuation variations for every single model. The goal, though, the hard part, is building that muscle memory, that pattern recognition, that understanding to be able to spot those extra setups. And also, when you capture setups, the hard part's also keeping the money. And you keep the money by limiting your engagement, which sounds counterproductive, but you know, it's just a truism in the market. ICT talks about it. You know, all these really, really nice, profitable traders who show their stuff live, you know, they all say the same thing. You know, overtrading, over leveraging leads to failure. Lacking patience, not like aggressively trying to implement the patience, right? By setting rules and following them, right? Without that, success can't live in your career as a trader, right? Success requires discipline, right? Especially in trading. Success doesn't survive without patience and discipline, right? Without cultivating those things. So you want to think about these things next time you put a rule and you're like, all right, I'm going to break the rule. Or, oh, I should be patient, but I'm not going to be patient. That's part of your rules, is to be patient. Think about it next time you do that, because for any of the problems that you guys deal with, every time you set a rule or tell yourself you're going to do something and you go out and you don't do it, you are like the friend that promises you every single day that they're going to do this or do that, and they don't do it. So you're damaging not only your account, but you're damaging that inner world that you have to live with when you push the button. You have to trust that person in the mirror that you are responsible with money. You will be able to protect your capital because you follow rules. If you can't answer, yeah, I agree with that, like I am that way. If you can't answer that, then, you know, the more that you break your rules, the harder and harder it's going to be. And all it is a decision. If you take a trade today, it doesn't matter. You could take a trade tomorrow. It's going to be here. If you take a trade today or don't take a trade today, that's not going to affect what happens 5 years from now. If you don't take a trade next week, that's not going to make or break whether you're going to be successful in a year or 2 or 5 years. You're not even going to remember it by that time. It seems so significant day to day because money's involved. Our goals are involved. What we're trying to do with our life is involved. But in the grand scheme of things, the lifetime of a trader, every day-to-day activity does not matter. Missing a setup today does not matter. What does matter 5 years from now is whether you built that patience, whether you built that discipline, whether you follow your rules, whether you've done this and built the trust inside of you that you could be trusted, you know. That's what will impact you over time, you know. So you gotta really think about these things, you guys. And again, that's something that a mentor, no one other than you, can fix. You know, you can get theory, you can get perspective, you can get all this stuff, but what you decide to do with it is what's going to decide, you know, whether these things get solved or not. Right? And that goes for everybody, including me, right? This is a conversation I had to have with mentors. But more importantly, this is a conversation I had to have with myself. You know, do I want to succeed or not? Right? Because I'm tired of disappointing myself. Do you want to succeed or not? Are you tired of being disappointed that you're not doing what you know you need to do? Because you'll get to that point. You know, all of us get to that point if we stick around long enough. But you're in control of how long it takes before you get to that point. I wish I would have been at that point from day one and didn't waste tens of thousands of dollars trying to learn this. Right? Learn these rules, learn these, realizations and truths in the marketplace. I wish I would have learned it quicker, but I'm stubborn. Probably like many of you. But it's human nature, you know what I mean? Kind of just is what it is. And that's why the markets are so difficult for many people. Damn near impossible for some. Because they don't have these conversations with themselves. Again, it's one thing for me to have these conversations with you and give you these perspectives. It's another with how you have these conversations with yourself. Because you got to answer to you at the end of the day. When you overtrade and over leverage and you go take a piss or something, or you go take a shower and you look in that mirror, you have to be proud of that person. You have to think, I trust that person to manage my money and make me successful. That's the conversation and relationship that really, really matters. And the only way that you improve in these areas is by forcibly applying the rules that lead you to discipline. That's why I talk about certain stuff all the time. Like every call, some people get annoyed by it. They're like, dude, you talk about it too much. I'm like, okay, well, are you disciplined? Are you still blowing accounts? They're like, yeah, I'm not disciplined. I'm still blowing accounts. I'm still doing this. I'm like, well, then you haven't heard it enough. Right? So that's why I keep talking about it. Because until you could say, yeah, well, I already don't overtrade and over leverage and I'm getting good results and this and that. Until that happens, until you can say that, once in a blue moon, maybe I'll take one more extra trade than I normally do. But I never over leverage, right? I'm very consistent with what I'm doing. Until you could say that, the message hasn't been portrayed enough. And people don't talk about this enough in trading, so it gets overlooked, So I want you guys to think about these things. These are significant. This is stuff that, of course, people don't like to hang around for, but, it is what it is. Those same people will come back to me. I'm blowing my accounts. Please help me. I don't know what to do. You've been told a million times. Like, bro, are you making the changes? No, I'm just, well, what more is left to do aside from action on your part? I have these conversations all the time with people. So it's very, very common. It was common to me too. Until I had someone telling me these things, talking to me like this, working with me one-on-one, everyday basis, holding me accountable. Then for like 6 months, 6 months is a special time horizon, by the way, at least for me. But then after 6 months, I look back after forcibly following the advice, and it was just shocking. I didn't even realize in the moment because I wasn't worried. I was not paying attention to P&L or anything. I didn't even journal much of the trades at all at that time when I was trying to do this. I was just doing it, and things got a lot more controlled. And I just realized, like, dude, like I feel better following my rules. I used to stress the hell out. It's not healthy. Over trading, over leveraging stresses you the hell out. It's already stressful enough. Life is stressful enough. This doesn't have to be that way. The steady hand, the person that's disciplined, they're the ones that come out making money. The people that do make money, some of them are wild and aggressive, but that's their world. For the majority of people, you're not going to be able to escape these realities. So you might as well, after today, make a promise to yourself. Find someone to hold you accountable too. Like if you have a trader friend or something, like say, hey, I'm trying to fix this. I'm going to send you screenshots of my P&L every single day, screenshots of my demo account every single day when I engage. And it has to be 2 setups. If it's more, you got to tell me about myself. Like, do something to interrupt what's going on, because I need to be held accountable, right? Whatever you got to do, you know, everyone's different. Everyone requires different things, different ways of improving, different requirements. And only you know what that is for you. So again, take this serious. Without it, it's impossible. It's a wonderful industry to be a part of, but you have to do it professionally. And professionals follow the rules, whatever those may be. And they never overtrade and they never over leverage, unless it's planned to do so. It's never random. It's planned well in advance. Like if they're trying to flip an account or something, there's a different mindset, but it's intentional. It's not, okay, this is my account that I care about, I'm trying to grow. I'm just going to randomly overtrade and over leverage and break my rules and take this trade and that trade that aren't part of my plan. I've never really practiced it really. I just see the pattern. I don't know any of the other context. I'm just going to take it because it's there, right? And I feel like it, or I had a bad day. You know, professionals don't act that way. Even when they're reckless, some professionals, it's planned, it's organized. I'm going to risk 15 to 30% of my account. I know if I take a loss, I don't care. I could lose that amount. I feel really good about it. I'm planning it. And this is not my normal way of doing things, but I'm planning on doing this. And if it takes me out, I'm expecting that'll be okay. It is what it is, right? It's all planned. It's not random. Like I'm disciplined here and there, and then all of a sudden I'm upset or took a loss, and now I'm going to overtrade and break my rules because I don't like how I feel, or I don't want to miss a trade setup, or whatever the case may be, right? It just doesn't work that way. So, and I know a lot of really good traders. One of my mentors, his name's Joe Miller. He manages like tens of millions of dollars. Like let me see. I think I showed this before, but I'm gonna show it again real quick before we get up out of here. Okay. Oh, whoops. How do I make it bigger? Not sure if you could see that. I don't know why it's so tiny. But he manages $32 million. Okay. I don't, can you see it at the bottom? Let me see. No, you can't. Damn it. But look at the lot sizes he's taken. This screenshot has $1.1 million in one trade setup. Mind you, these are huge lot sizes, but he manages $32 million. Look, now the elephant in the room, investments. We started some numbers last year, blah, blah, blah. We're able to do some numbers this year, blah, blah, blah. He's asking for people to donate so he could manage their money and give them a return. This is the pedigree that I've learned from. This guy's been trading ICT for like 13, 14 years. All right. So these people are no joke. You know, I've had to spend tens of thousands of dollars trying to learn from these people because their time is very, very, very valuable. And I'm able to come and share insight from heavy investments that I've made in myself with you. At like not even and here on YouTube, it's not even a cost. In my private group, to work closer, like they did with me, not even a tenth of what they charged for their time. And you guys are getting it for free here on YouTube from people that manage more money than I'll probably ever even see in my life. Okay. I mean, that's astronomical. So again, the advice that I give you guys comes from a place that, you know, I know that I know that I know. Okay. Because I've been around things like this, people like this that have proven that this is possible, let alone what I've also been able to prove to myself over the years through pain, okay, and dedication and listening, changing my ways, accepting the reality that if I keep this up, I'm going to fail. You know, I will not accept that. I have a daughter. You may have a family. You may have nieces, mom, dad, whoever that you may have told about trading, right? It's up to you to prove that you really, really want to make this happen. And part of that admission is being willing to change whatever needs to be changed in order to get there, no matter how uncomfortable it is, to sacrifice whatever it takes. You know, if I had to go back, think about this. If I had to go back and I didn't have a daughter, but I knew I was going to have kids or anything else, I had someone else that I cared about, and I had $0 and I was homeless and but I wanted to trade, right? And say I met my mentor, right? The one I just showed you, Joe Miller. Say I met him in the street. He gave me $5 or something. He told me, yeah, well, you want me to help you or teach you? I'll teach you about investing, right? But it's this amount. I would have literally, given the opportunity that I know this is, I would have went and got 3 jobs, would have lived in my car, saved up as much money as I possibly could, cut out as many bills and things that I would sacrifice whatever it took, wear the same clothes for 3 years if it took that, sell whatever I would need to sell, get as many jobs as I could, save as much money as I could, eat as little as I could to make sure that I can put myself in position, because it's that serious of an opportunity, and change whatever I would have to change, which I've already done, right? And it's constant work in progress, right? We're all imperfect. We all have things we can improve upon, but this is the side of trading that people don't understand. It takes a huge amount of work, right? And it takes a lot of things needing to be done that you're not going to be comfortable with at first. You know, some adjustments that you may not have expected that you had to make, you know, some personal changes that maybe you weren't ready to make when you first started trading, or didn't even realize you were going to have to, you know, face up to and fix, right? Like impatience, reckless money habits in real life, you know, being impulsive, right? Not managing your money properly, not managing your relationships properly, right? All this stuff affects you, and it has a direct impact manifesting in the chart, from overtrading to over leveraging to not being confident in your trades, being overly confident. All that stuff could be brought right down to a very particular thing in your life, or a particular thing that you're doing. You know, it's probably not going to serve you as a trader. It's like a whole lifestyle shift most of the time people have to make, you know. And again, it may not be that way for everybody, because some people's mindsets are different, easier to adapt to these things than others. But mine, all the stuff that I've described to you, I've had to do. I was not a person that could be successful in investing, period, let alone day trading. Like, I had to totally change who I am internally, you know, keep my values and whatnot intact, but the way I view the world, the way that I view money, how I manage my money, relationships, I mean, all of it had to change, everything. Like, the list is very long of the things that I had to, like, literally pry out of myself to become who I need to become. And part of me understanding what I needed to do was being around people that are where I want to be at, like my mentors, like ICT, like my friends, you know what I mean? Who are more successful than I am, who got there quicker than I did, you know? So it's just one of those things. You know, trading, this is why trading is not like any other business. Under the surface, when you look away from the chart, away from the day-to-day P&L, the candles, the ability to want to get in to a trade and make money. When you look beyond that, what's required to get that, to make trading an activity or a business where you just push buttons and make money, there is a huge iceberg below the surface filled with all these things that I just mentioned and more for some people that have to be dealt with, you know? So hopefully you guys take some value from that perspective, some of the stuff I shared. Of course, hopefully, you know, the chart makes sense of what we're looking for. Yeah, the things I just talked about are more important than what you see on the chart, because this chart can only speak to you the way you want it to speak and manifest what you want it to manifest when these other things are also actively being acknowledged, right? So again, I'm not here to blow smoke up your ass. I'm not here to be a yes man, tell you everything you want to hear. I'm here to help you learn to be a soldier in the financial markets, in the stock market, in whatever asset you want to be a part of. And that does not come from someone telling you everything you want to hear. It just doesn't. If it was, everybody's students would be successful, but most of them are not. Most mentors have majority failing students. This community, my private group, majority are doing well. It's a small community because I keep it that way, right? But there's a difference. You know, this stuff's very important. Okay, so yeah, hopefully you guys got value from today. Appreciate you guys' time. Again, just to reiterate with the NASDAQ, I want to see if we can get through this fair value gap if I'm going to be bullish. We do got this bullish order block here. Okay, we got this one down here, but we have the consecutive candles there. So we should be able to see this body to that body, 50% not be traded to, if it's going to go higher. If it does break back down below this volume imbalance, if it breaks through this low and we end up below the midpoint of this down candle, then expect that this level here will be part of what we're looking at to see targeted. If you take this high to that low, we're kind of resting at equilibrium. We're at equilibrium going into a new quarter, a start of a new power of 3 for the next quarter that comes out when the new quarter shifts. Okay, so expect accumulation first, and then a little bit further, maybe like 2 weeks from now, 3 weeks from now, maybe we'll see manipulation. Maybe it gives us manipulation right from the get-go, right? And sometimes that happens on the daily ranges too. And it could absolutely happen on these charts too. Power 3 behaves the same way on every time frame. But we'll see. We're at a level that we got to see this level get tagged or see this thing break down before I'm fully confident with what I believe price is going to do. We're just in the middle of this range. So it can do whatever it wants to do until it breaks either this inversion, closes outside of it, or if it breaks down through these levels and closes below the midpoint of this level here. That'll really ram home the idea that this gap will probably be targeted. Let me actually, where is, right there, there it is. So yeah, if we get down below the midpoint of this candle, it's going to target the sell side inefficiency here, which is on that monthly chart, right? Why that level? Why not the whole thing? Because we got sell side, buy side, And this little piece here from this high to that low, that doesn't have sell side offered from this monthly perspective. So if we do break down, which I mean, this is a huge wick. So it's looking more so like it's not going to want to go down there unless this gets respected and we end up below this level and we never even come back up into here. Okay, so those are the two scenarios we're watching for. As the week progresses, we'll be able to have a more clear understanding, but we're ready for either direction that it wants to go in. And we got rate cuts coming. That's bullish. So I'm more so leaning, if I was going to have a gun to my head, I'm more so leaning towards this objective. See if it can't get up there, invert that, come back down. And then inside that return into that, that's where I will be looking for most of my opportunities to try to get us up to that rejection block. Before it gets to this rejection block and this high, we have this high, we have this volume imbalance, we have this high. So these are daily highs. Okay, and then we also have this high first and foremost, right? This happens before this happens. So it may have a setup that looks to get up there, especially if the dollar looks to decline aggressively. Maybe this opens up, drops down a little bit, doesn't disrespect this range too much. Maybe it wicks through this or stops at the midpoint of this wick here and then displaces. If it does that, we may be able to find a setup towards this high up here and then maybe even get up to that area up there. But again, we'll see what happens as we start the week. But this is my perspective. This is what I'm going to focus on initially. If something changes, we'll make adjustments throughout the week and I'll let you guys know. But yeah, with that being said, hopefully you guys got value. God bless you guys. Have a good rest of your weekend. I will see you beautiful people here on YouTube on Tuesday as always. And then for the rest of the week, we're back to normal schedule for you guys in my private group every single day. Okay. So yeah, with that being said, God bless and have a good rest of your weekend. Let me know if you guys need anything. Okay. I'll talk to you guys on the next one.